Luca Todesco here with us today. Luca is the founder of Luce Capital and a VC investor at Cycero, which is a deep tech Italian fund for AI, cybersecurity, and robotics. Luca, thank you for being here. Really excited to talk with you today, but why don't you maybe give us a little bit more of an in-depth intro into yourself?
Of course. Thanks for having me, first of all. About myself, I came to the VC industry quite late in my professional life, I would say. That's a little bit atypical, maybe more on that later. My background is in economics, so I'm a economics and finance guy. I've been working in banks and for banks for several years. I've been working in major consulting companies. I've been working in the wealth management sector. And so basically all of these things brought me towards the investment side of the job. And then I decided that I wanted to do something quite counterintuitive, as we will see. So running a VC fund, a deep tech VC fund in Italy, which is not probably the most obvious location for such an enterprise. So a little bit of everything, I would say. I like to think about myself as a learner, curious, humble. So I know there are many things I don't know, but I'm, trying to explore them little by little.
Awesome. Well, I'm really excited to talk to you today because I think you bring a really fresh perspective, and I think you already referenced that you're not necessarily the typical VC guy. You've had an unusual path to entry, and I think it'd be really cool to maybe dive a little bit deeper and talk about your journey into the VC world. And I think kind of maybe how, because you've taken a slightly different pathway, it kind of works as a bit of a superpower.
Let's hope so. So I would say it's always easy, as I think I'm quoting correctly. I think Steve Jobs was saying that connecting the dots backwards is always easy, but when you are taking your professional path, it's not always clear where you are going to end up. So my first job was actually into valuation of companies. But the twist here is that those were listed companies, so very large Italian companies. So I've been working for Citigroup for a number of years, and I was doing, the financial analyst job. So I was covering in-depth large listed companies in the technology, media, and telecom sector. So that was, I would say, the first element, right? So how to see if a company is valuable or not, some kind of classical valuation, something about also public markets, which is something that VC people always see as a potential exit, but maybe they're not very familiar with them. And after that, I moved into the consultancy world. It was not 100% a spontaneous move, I would say, because, and here you will be able to infer how old I am. In 2008 crisis, banking jobs were dramatically out of fashion all of a sudden. And so I had to take a pivot, and this is another very VC kind of stuff in my career. And I moved to McKinsey and Company, and then to Boston Consulting, doing basically a little bit of everything at the beginning, as you typically do, but then focusing on finance and banking. And so that bit of my career allowed me to take a deeper look into how companies really work, large companies, with all the intricacies, with all the difficulties, all the political issues you find into these kind of places. But always, having in mind the I would say number, the finance, the cash flow, the P&L, balance sheet aspect of the problem. After that, after two kids, and after that lifestyle was having an horrible impact, on my life, I decided to do the final, I would say, maybe step in my career. So I moved to the asset management and wealth management sector. I worked for a number of years in Credit Suisse, taking care of high net, ultra high net clients. And That was the first time I really got in touch with the startup world from a professional standpoint, because it was 2015, and as is it clear today, we were desperate to find something interesting to talk to um, our clients. And startups seemed to be something promising. So I was basically starting to create the network I'm leveraging also today, getting in touch with all the startup ecosystem in Italy. It was very, very tiny at the moment, and trying to create a connection between private investors and startups or VC funds. And that was really fun. Fast forward some years, and I've been asked to join basically the first deep tech venture capital fund in Italy, which is called Cicero, who has been basically um, imagined, I would say, by Mr. Alberto Bombassei, who is the founder of Brembo, the world leader in terms of braking system and braking technology for cars, for motorsports, and from a bunch and by a bunch of large entrepreneurs in the north of Italy, which is the most industrialized portion of Italy. These people thought that Italy was in need of having an initiative like that. Italy is very strong in mechanics, mechatronics, electronics, and they thought, okay, we need to create something for the future. So it was also some kind of give back initiative from them. We created the fund, we launched the fund, and basically here we are after 5 years, and after 13 investments, one exit, hopefully more to come.
No, it's very exciting. I really want to pick into something that you said there, though, Luca, because I think kind of, the Italian VC ecosystem is actually really interesting. I don't think it's talked about all that much, and arguably it's pretty overlooked. I think kind of a lot of people follow, especially when it comes to VC investment, the typical your San Francisco, your London, or wherever it may be. But actually, there's quite a bit of noise that's happening in Italy. I mean, why don't you maybe tell us a little bit more about what that ecosystem looks like, and maybe
Mhm.
why you think it's been overlooked so far?
Yeah. Um, so the ecosystem, the VC ecosystem in Italy has been overlooked so far because, quite simply, and I want to be brutally honest, it's very small and has produced a negligible amount of exits. So people have not been making a lot of money in Italy yet. Just to give you some point of reference, Italy is the seventh or eighth economic power worldwide, is the second exporter in the European Union after Germany. So I mean, we are a small country, but we count something in business, right? The Italian ecosystem in VC, however, is just one third of the Spanish one, one sixth of the French one, one tenth of the UK one, and a very small number if you compare that to the US. In terms of whatever you want, in terms of total money invested, in terms of average round size, in terms of exits, as I just mentioned. Um, and there is a strong disconnection. I would say there is an arbitrage opportunity, if you want to talk technical, between the potential of the Italian economy, of the Italian innovation ecosystem, of Italian industry, of Italian entrepreneurship, and the results that the venture capital has again obtained so far. Uh, the reasons, I would say, an historical aversion from the Italian investor to risk. Italian investor uh, very wealthy in terms of private wealth, but they are also very conservative, and they like to have their real estate investment, their bond investment, little bit of equity, little bit of private equity, increasingly so, and club deals, but they are uh, quite risk averse when it comes to venture capital, to very long, illiquid, investment with a high risk profile. Um, and this is a pity because when you think that some of the innovation we use every day, the radio, the telephone, the microchip, are all born in Italy or from Italian inventors. You understand there is something going on, and you understand that also in terms of university, also in terms of um, research centers, we have definitely something to say. So there is a huge disconnect between the potential and the actual results. Which, if you are an investor, as I happen to be, means that there is a huge opportunity here because you have low valuation, you have a lot of competition for investment, so you don't have to queue up to invest in next startup, but there is, a lot of supply of good startups in Italy. Um, there is a cost of labor, sad to say, but that's the truth, which is one half of what you are going to pay in France or Switzerland, and maybe one fifth of what you are going to pay in the Valley. Because if you can get a good PhD engineering or STEM PhD for 50K a year, something like that, 60. Okay. And so you have low valuation, very limited cash burn, very easy access to deals. Of course, what you need to do now, only in brackets, okay, because this is a huge portion of what our work is, okay, is to be able to show the world what we got to attract investor from abroad, which is happening. There are a bunch of funds which are opening, European funds especially, which are opening their offices in Milan. In the conferences you have all around the year, you will see an increasing number of European investors and US investors. So this is happening little by little, and I think we are in a very good position to reap the benefit of that. In our portfolio, there are 4 companies out of 12 which at the moment have some kind of operation in US. So I mean, they are moving there. They are getting some US investor excited. They are getting some US client excited. So I think it's happening.
No, and I think kind of, your portfolio is kind of reiterates that because you've been able to already get a really strong kind of mixture. And I know it kind of splits across the AI, the cyber and the robotics, but they are hot topics right now, and that is where it doesn't really matter geographically where you are, where a lot of the investment falls. And I actually think kind of, you're having a prominent cyber focus or focus on kind of deep tech like that. What does that actually look like? Because there's so many startups that come up out there, and obviously there are still probably several to choose from, even just kind of within the Italian ecosystem. So yeah, I suppose kind of as you continue to grow or with your existing portfolio, what is it that's kind of made you go, right, these guys are what we're investing in, and this is kind of what we're looking for when we're working in this slightly different ecosystem than, say, you would in the US?
Mm-mm. So I would like to split the answer maybe in two parts. Okay, so we are looking for, of course, the product, what these guys are doing. We have a very clear idea of what we like and what we don't like that much, and then we need to focus on all everything else, which is what, in my personal view of venture capital, makes all the difference. So all the soft skills, the soft aspects, the team and stuff. So, starting from what we like in terms of product, we do like products. We do not like services. So we don't want to invest in anything that it's not really scalable in the cybersecurity. In robotics can be slightly different, but in the cyber sector, we want to have a product which can be plugged and play as easily as possible by a highest number of users as possible. We want products that are sticky, and with sticky, I mean basically two things. Either products that are really, really deep into the client's processes. So it's the sales cycle can be longer, can take a lot of time to get there. But once you're there, you are there for good because it's going to be so complicated to exchange the solution the client is using and to put you out basically that it's just convenient to keep you there until you make a mess. Okay. Or something which is extremely light in terms of footprint, and so something that the client is not really aware they are using. It's not um, it's not visible. It's not intrusive. So it's just something that you basically pay without noticing because maybe the ticket is not very high in general. Okay, and these are, I would say, the two kind of products we like. We also like regulation. In Europe, we are. I think maybe we are lucky, maybe we are not. This would require another hour, maybe, but we are highly regulated as an ecosystem. So there are a number of startups which are leveraging on that and providing solution to be compliant with the regulation, which is again something we like because it's a product and it's inherently sticky, and because the client basically is the government, so the government decide where you are going to be in the market or not. And so I think those are the key features of what we are looking for in cybersecurity. As an example, one of the company we invested recently in is called TrueScreen, and as the name should suggest, is a company which is tackling one of the, I would say, hottest problem at the moment, which is the authenticity of the content which is produced and shared online. So these guys, two founders, one is your usual tech savvy kind of guy, and the other one is a lawyer, decided to fund this company in order to um, provide a tool for everyone to be able to certify uh, with a legal value, so you can use that in a trial, that a certain picture, a certain audio, a certain video clip has been taken in that time and in that place and has not been modified in any way using AI. So, again, product, again, regulation, and again, something extremely sticky because we are selling it to insurances, right? Because these people are spending a huge amount of time sending people out to verify that, your car has been bumped in that specific place, in that specific time, and that is the damage. When you take a picture with the true screen solution, you're just sure that this is what happened. And so you are saving a huge amount of money. Um, in terms of the second thing I really like, so we mentioned the product, we mentioned all the features of the startup itself or of the product itself. Uh, what I really like, however, is the team, and I'm always investing on teams more than on ideas because good teams can have average ideas and turn them into a success, or can have more than one idea. They can do a pivot or whatever. If you invest in a good idea and the team is weak, you're just wasting your money. Uh, Talking about Italy, another feature of the team I really like is the level of ambition. They need to be global players, potentially. Okay, so they need to have the will and the stamina to go for the long haul and to ideally have a strategic European vision or global vision. So moving to the US, as you just mentioned. So I think those two are the key factor. The team, and we want to have a solution which fits with our investment policy.
Yeah. And I think kind of to add on to that, because I think both of those things are definitely critical. You still have to have the right kind of products that has to be demand in the market. But I love what you're talking about with the team there. And you think kind of you actually have given me a couple of examples before, and I think you just referenced one of them there where you've kind of had someone in your portfolio recognize that the market demand has shifted potentially, or there's additional technology out there that, especially around the AI side of things, that actually,
Yeah.
if they integrate this, it's, it's only going to elevate their product offering more. And I think kind of that probably comes down to having a really good team that can be agile enough to adapt to that change. But I would be really interested in hearing your thoughts on it, because I think that's a really difficult thing to do successfully. And I'd be interested to see why you think kind of the portfolio businesses that you have been able to adjust to that. And I suppose, yeah, I mean, whether it's around their team or the existing product, it'd just be interesting to see how they've overcome that challenge, and then being able to, I suppose, come out the other end of that tunnel, and things be driving towards success.
Yeah. It's quite funny because we launched the fund in 2020, and in our fund rules, you read three sectors: AI, cyber, and robotics. In 2020, writing AI was really a moonshot. Okay, it was something that we hoped to be able to see in the next 10 years, which is the fund duration, but we're not sure about that. Now I'm tempted, if I'm writing a new fund rule, not to mention AI altogether, because it's virtually impossible in my daily job, in the past 12 months at least, to find someone which claims not to use AI or not to be AI involved. So it would just the same as saying, okay, I'm investing in companies which are using the web. Okay, you don't need to write it down. Okay, it's obvious. But there is a marketing component into that, of course, and so not everyone that claims to be using the AI really uses it or really needs to use it. It was like the blockchain 5 years ago, right? It was everyone was blockchain. Now, no longer. But it's true that it is something you need to take seriously into account, because every solution you are thinking about or you have been thinking about uh, can now be done, maybe not today, but in a year or two, in a faster, safer, and more productive way using AI. So one example, we invested into a what we call a dual company a couple of years ago, which is a company called Data Crypto, which is an Italian company by all means, and has been founded by an Italian guy who is based in the San Francisco Bay area. And so basically, we have one branch in Italy and one branch in San Francisco. Uh, Interesting story also because this guy is mastering what I mentioned before. So he's selling at US prices and paying Italian development costs. So that works pretty fine for him. Uh, this gentleman developed a solution which is called homomorphic encryption, which is a very big word for something extremely simple to explain, but very tricky to perform. So the idea is that you want to have your data encrypted, so not readable, not accessible, in any single step of your workflow. So not only when they are on your hard disk, let's say, not only when you are transferring them from one hard disk to the other or to the cloud, but even when you are using them, and even the answer of your query is going to be encrypted. So basically, you have garbage in, garbage out, but this garbage makes a lot of sense if you have the key to translate it. Okay, so this is basically the holy grail, is the final solution in terms of encryption. And this guy was basically thinking application like database. So I have a database. I don't want anyone to steal my data. So I use this kind of extremely powerful protection in which I can run a query on my database. I can ask something to the database and then get an answer which is encrypted as well. So maximum security. Uh, then enters AI. And suddenly no one is interested, or very few are still interested into encrypting database. And everyone is very much interested into encrypting the data they are feeding to the models in your typical RAG system, or into protecting if they are, running or they are creating a model, into protecting their parameters. Okay, in order to make sure that no one is messing with the model, so is stealing the parameters, which is the real value behind an LLM. So this guy made the pivot, and he has been very good and very lucky, and discovered that his technology was also able to perform that. So he could apply the old technology to the new paradigm, and make sure that he could prevent AI model from being tampered with, and also prevent the model to understand and to read the data, your private company precious data you are using to feed them. And so now he's making a big splash. He has been to RSA 1 month and a half ago, and he's running, I don't know how many POC at the moment, to see if he's lucky enough. But this is just one example. I mean, AI. I think that you should think about AI as a new tool you have. Uh, it's more than that, because if you're not adopting that, maybe in 5 years you won't be here anymore. Okay, so it's a little bit more tricky than just a tool. But it is something that it's here. So it's either you use it and you ride the wave, or you are just totally out of business. But I think that in our two and a half, I would say. So we have two sectors, which are cyber and robotics, and then AI. It's a half a sector because it's basically pervasive. Um, I cannot envision any investment in the next 5 years without AI on board.
Yeah. And I think kind of that leads us to close off the podcast quite nicely, Luca, because when you ask people about, where do you think trends are going, what predictions do you have for the space, so many people talk about, AI, 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 and I think ultimately you're 100% right in the sense that, well, it's like kind of saying, cloud. Everybody uses it
Mm,
now. If you were bringing out a product and it was purely kind of on premise, you're probably not going to have a huge amount of traction when it comes to taking that to market. So I'd be really interested to hear from your perspective, especially if you're focusing in cybersecurity and robotics, with the likelihood being that AI just naturally filters into both of those categories. Where do you predict kind of the future trends are going to be? And I suppose another way to also look at that is, what are the kind of companies that you're going to be keeping your eye out for?
mm. That's a $1 billion question, of course.
I know,
I will do
ability
my
we
best.
all know.
I will do my best to answer. So, uh, first of all, yes, AI is going to be very prominent in both robotics and cyber. It already is. Okay. My idea is that AI. Okay, you had chatbots, and I'm using like the past tense, but it was like 2 years ago, 2.5 years ago. Okay, you had chatbot. Once upon a time, you had chatbots. Now you have agents. Now and then you read and hear a lot about purely AI startups in which basically the AI is the founder. Okay, so this is maybe a little bit down the road. We're not getting there yet, but this is a trend that's here to stay. It might be a bubble in terms of stock market, but I'm pretty confident this is something that is going to change fundamentally the rules of the way we do deep tech from now on. Okay, um, and AI is jumping out of your PC, or basically is moving slowly to smaller PC, which are going to be in robots. We are already seeing that. The impact that Gen AI had on robotics is not yet visible, but it's massive. And it will allow robots to interact in a much more natural way, especially in unstructured settings, which is where you need them the most and where they perform the worst in a way, right? Because everyone is very happy about their industrial robot working in a very controlled environment, and we are very good in doing that. We are less good when the robot needs to interact in an unstructured environment, so with people or with obstacles or with in places he's not familiar with. AI can provide a huge leverage in that. And this is, I would say, the first portion. The second one is that AI is also able to allow for a much smoother interaction with robots, which is another of the problems we are facing. So robots are perceived as something different from humans, as they are, potentially, harmful or menacing, especially if you are not a someone who has been born after 2000, the year 2000. Uh, the interaction with them is going to be much more natural, much more fluid, and so they will be able to take care also of tasks that at the moment are uh, dedicated to humans. Like think about the healthcare system. Think about the care of elderly or of kids. This will come in due time. In terms of cybersecurity, AI is a nightmare because it has improved dramatically uh, the tools available to attackers, uh, the attacking area. So now the attacks can be performed in a much more wide set um of ecosystems of environments, right? And also has dramatically lowered the kind of skill set you need to have to be dangerous. Because once, I mean, like 5 years ago, you really had to know what you were doing if you wanted to perform a cyber attack. Now with AI, it's much easier. You don't need to be as proficient as an hacker to be dangerous. So I mean, cyber AI is everywhere, and I think our portfolio is 60% robotics, 40% cyber. I think that in the future it will be the other way around. Fund two will be 60% cybersecurity and 40% robotics because cybersecurity is getting so pervasive in a sense, um, and also because it has a lot of. We didn't mention the huge topic of dual use technologies today, but it's there. Our portfolio is basically a dual use portfolio for very obvious reasons. And cybersecurity is going to be massively and increasingly important also in terms of national interest and security.
Yeah. I think it's really exciting time to be fair. And this is the thing with sometimes these podcast episodes, they could arguably we could go on forever. There's so much to unpack. Um but what I've got to say, Luca, it's been really valuable to get your insight here. I think you've come through with some really fresh viewpoints, and like I say, I think this is an ecosystem that has historically been overlooked. But actually, if you can kind of put the predictions in for the next few years, there's so much potential, and I think it's really exciting time. So thank you for coming on today, for sharing your thoughts. And yeah, it's been a real pleasure.
Thank you so much, guys. Till next time. Ciao.
Thank you. Thank you.